The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, more volatility, that's the best way to describe the market trade we saw on Tuesday. We just have a lot of headline risk across these markets. Plenty of things we're watching, both with the outside market trade and the Fed and the banking system, and then supply and demand fundamentals when it comes to the grains and oilseeds and in livestock. Here to run through things with us, we welcome back into Market Talk. Jacob Burks with agmarket.net is joining us here today. Jacob, always good to catch up with you, man. And I know I just saw you last week at Orlando, but I know we got a chance to catch up there, but good to have you back on the show here this week. I hope you're doing good, man.
Thanks for having me, Jesse. I'm glad to see that you got out of the airport.
I know a lot of folks had those travel issues getting out of Orlando. Luckily, we both made it out of the airport. And for anyone who's still stuck down there, we're sorry. We feel your pain. Jacob, let's dive into this market trade after Tuesday's session. You know, I look across the grains. I was a little out of pocket on the day. I was kind of catching up on headlines here before the show. The wheat market, getting maybe some premium back in there with this Russia-Ukraine grain deal business. We'll talk more about that, I'm sure, in a minute. Quart of beans up a little bit. Overall, though, you and I were chatting before we went on air. This whole banking thing, the unknown, the outside markets, it feels like outside of a few different supply-demand fundamentals, these markets really headline-driven here again on Tuesday, Jacob.
I believe you're right. I think that first, the volatility is a fear, is a measurement of the what's unknown, the fear of the marketplace. And if you can look through all kinds of commodities, all kinds of futures and option trading here, and look at so many different both sides of the trade, in all the grains here today. You look at the crude oil, what it's done here. It's just a fear right now of what's going to take place, and how the Fed and how everybody's going to work together to calm the fears, the issues of the economy and the banking woes, versus what are they going to continue to do to help the rapid inflation that we have going on. So yeah, fear. That's the name of the day. That's the name of the game right now, coming into the middle of March here.
Well, and it feels like some of the fear maybe eased a touch, but it's still definitely out there. I know, thinking about the expected rate hike coming up here next week after the Federal Reserve meeting, there's a lot of talk now. We might not see one with the banking issues, or if anything, maybe just 25 basis points instead of 50. You mentioned fear. I know the Wall Street Fear Index to VIX, that's backed off a little bit here as we've gone through the day today. The dollar has come off the highs. We're back around 103-ish, 104, but still just a lot of that fear out there. And I think just not just folks, who are directly affected by the bank news, but I think just everyone across the country and everyone in agriculture too is concerned. I think we're all on a little bit of pins and needles here, and obviously then we see the reaction in the grains. You think corn, beans, and all the chart damage that's been done, especially last week. I think that just creates some extra nervousness out there, Jacob.
Yeah, and you said at the beginning, like, it's a headline-driven market, and that's kind of what the markets do, right? They look at what's going on right now, and we can sit and discuss, when you boil it all down and take that 10,000-foot view of the grain market. Let's just focus on the grain market right now, where you see we're tight. We're tight, very tight stocks to use, very tight supply, old crop. Okay, we have the intentions and the thought process that we're going to plant a lot of corn coming into this fall or this spring, and you look at that, and we pushed the market down maybe a little bit too much. Maybe we found some support in here at these levels to get some old crop support. And then you see some positive things like China coming in and finally getting the sale that we've talked about announced, 612 million metric ton. That's something that hopefully can get the market, spark back up and head the right direction. But yeah, if you got to step back and look at that view and look at the supply demand every now and then, just be like, just take a breath of fresh air, and just take a relax button. But in the soybean number, you saw one thing that you saw here today is you saw the bull spread start to turn back to the positive side of things, and I think that was a lot done with the comfort of the government saying, hey, we're not going to let these smaller banks fail. We're not going to let the debts go unnoticed, untaken care of. They're going to have some security there beyond the 250,000, which I think that did give the market a lot of comfort to say, okay, we're not going to just continue to pull money out and see this thing crash. So, I think with this export announcement on there in the corn, I think that was something that really benefited us today to say, okay, we've pulled enough out of this marketplace, we pulled enough out of this price that now we're going to get some type of bullish action here, and hopefully we can sustain this a little bit.
Well, thinking just on this corn market, it looked like funds were buyers in the corn market on that announcement you mentioned, finally getting that China news in there. I look at corn, though, especially new crop corn. We've done so much damage to the Dietz contract here as of late. Same with, front month May. It looked like maybe there's been some farmers selling. So in the corn market, are you a little more apt to really maybe think about getting some risk management on the books here more so than say soybeans or wheat, just with the way this corn market's acted the last week or two?
So yeah, I think it's always after spending a week with a bunch of farmers down there in Commodity Classic, the question that you hate to hear is, what do you do now if we haven't done anything? So two things I've been focused on. With first of all, my customers that have done something, the guys that have been aggressive making sales, that have been aggressive, putting some price floors in place. That's kind of what we've recommended a lot here this winter coming into this spring. And I think what we've got to do is we've got to manage those positions. Okay, I mean, if you're a heavily sold person that we've come down here to what we'll consider some type of support level, we know that it's still middle of March. We know that we have a planting intentions coming out. We know that we have weather problems that could arise as we go through this. So it's a very important, I think, to take your puts and look at what we could do if we rolled those down or if we manage those puts along the way. Maybe you want to leave that as a sell, but maybe we come down and sell a lower put to create a vertical put spread. There's two different ideas there that you can do with what you have on now. If you've made a ton of sales and you think, hey, I want to take a percentage of my bushels and re-own it at this level, not a bad plan. Look at some type of call or vertical call spread to get that accomplished.
Well, thinking as well about the wheat market, Jacob, it feels like the Russia-Ukraine grain deal is at the forefront here, and thinking we're putting some risk premium back in these markets possibly. I heard some chatter that Ukraine officials want 120 days extension. Russia wants 60. It sounds like we're trying to find middle ground here, but it might be a little tough, and that might have been the reason for some of this risk premium back in, plus some fund buying, I think, in the wheat trade as well today.
Well, I think that, coming off of a news story that could create a little bit of comfort to the Middle East area as far as what we're fulfilling in that area and what we're going to be able to get out. It sounds like we're going to be able to get out and get some wheat, get some grain movement out of there. That area there, the conflict is so complex to me, and how they're getting cargoes inspected and the different rate of what they're getting out, that I think it's more than just looking at what deals signed. Okay, I think that's the headline right now. I think that it sounded to me like Ukraine wanted more than 120, like they were going for a full year, settled on 120, and now the Russia's backed off to 60. So I think there's still that fear, that we could maybe even not get that done. And if that happens there, I think that you're going to see more focus, more movement of the wheat sales continue to the United States. And so I think right now that we've seen funds come in here and be very aggressive in the wheat market on that note today.
Well, and also too, it sounds like that CFTC data is going to be caught up here this week, and I think that's another piece we've been missing too. We want to see, just how short maybe some of these funds are in Chicago wheat. Could those short positions be higher than we even think? And I think that's going to be another interesting piece in this wheat market here as we go through the week this week, Jacob.
I totally agree. I think that, first of all, in all the commodities, not knowing where the positions are at and what we've seen. Yep. And I think, with that bank deal, that is a very complex issue alone of what happened when you see these big index funds that are typically long only and they say it's time to get out, sometimes commodities is just a minute part of what their overall investment is. And if they say, we're going to liquidate these positions, it's, kitty bar the door, we're just getting out no matter what. And that can cause an extreme movement. So funds coming back in here to lighten up in some of this position, balancing up. I think when they get overweighted one way or the other, it does cause some moves that are make you scratch your head, just unexplainable. And so, yeah, I'm very curious to see at the end of this week. First of all, that report is always on Friday of what we did on Tuesday. So the accuracy of it, we complain about the inaccuracy of it until you don't have it for a month and you just want a little bit, right? So I am curious to see where we balance them up as far as this Tuesday goes.
We are having a conversation today with Jacob Burks of agmarket.net. Earlier, you mentioned the soybean market, and I want to talk about that just a little bit more. It feels like that export window is starting to close down finally after it kind of was extended, and some of that export business now going over to corn. So maybe just a delay in switching the windows here. It feels like that's having an effect. I heard some whispers from farmers last week at Commodity Classic, though. Still, a lot of folks are considering soybeans just because of the good price potential that's out there on the board, the good premiums with crush. What did you hear last week, and what are you hearing from farmers? Are they still excited about this soy complex versus, say, the quarter wheat markets right now, Jacob?
Well, I think if I would take a bet, you probably were talking to producers that may be in the peripheral of the Corn Belt, right, on some of the outside areas, some of your Dakotas and some of your even Nebraska guys, and maybe the Delta guys. You look at the ratio between corn and beans, and I'm not even sure exactly today what it is, but it's been hanging out and raised up to that 2.4 level. And some of those areas in higher cost production areas, or excuse me, not higher cost production areas, but lower yield areas, where you're going to see some guys switch from corn over to beans. I think to the glut of the Corn Belt in the Midwest there, I don't know that you're going to see a lot of that just because the production of corn is so good. But yeah, I did. Corn is, beans have stayed relatively strong compared to corn, and I think that you will see some guys move some of those acres over into corn on the outside, or excuse me, into beans on the outside of the Corn Belt. But that has been, that was a lot of talk last week. When we were talking with the guys about what kind of rotations and changes you're going to see. If I had to say, 75% of the guys had make no changes, but it's that 25% that could or possibly will that make a big difference when it comes to that March 30th report.
Well, a lot of things to consider. We're going to watch these grain markets closely here in the next couple of weeks ahead and that end of the month report. Let's talk livestock. I want to dive into cattle and hogs with you. The cattle trade on Tuesday, lower. I guess I'll throw this at you, Jacob. Does it feel like in this cattle market we're maybe coiling to make another move higher, make another leg higher here? Or is this market simply just hit its wall and maybe this is seasonal activity here in the cattle market as we've kind of leveled out here for a couple of days?
It's really typical. I mean, this is kind of an unseasonal year. I mean, we say that a lot, but it's really not followed a lot of seasons just because we've been on such a long, slow grind higher. A couple of things happened today that I noticed. In the June contract, looks like we did come down, go up today and fill the gap that we had left yesterday. So it's a little. You talk about the cattle, you see a lot of technical trade. You talk a lot about the charts whenever you're looking at livestock markets. The couple things that are known. We've talked a lot about the story of the lack of cattle, and we'll see a cattle on feed report, I believe Friday this week. And you know that we're short cattle. Beef production is going to be down. Profit margins for the packers is something you got to pay attention to, and it's been there. One thing that we've seen this week is we've seen boxed beef fall off about $6 in the last 5 days. And that is a kind of a reflection of what's to come. With the economy, with the stock market falling off, and how that's all going to play out together. You look at the entire protein complex, and you see a lot of problems with the avian bird flu, where you're seeing some production down in whether it's layers or whether it's the total complementary products to the beef. Weigh into this thing. And right now, our hog inventory, our pork inventory is relatively strong. And they will keep the price in check, I believe, on the retail side of the beef. So, long story short, yeah, there were some things that traded this week. Technically, we went down and touched the 100-day moving average in the live cattle. We bounced off of that yesterday, went up, filled the gap, and now we kind of settled in the middle of that. So a lot of technical trade here. I think the market was due for a pullback for several different reasons. We had made a big run up based off the supply side of things, and now we've talked a lot about the fear in the marketplace, and the fear in the marketplace weighs heavily onto these the protein markets.
On the hog side, Jacob, feels like hogs have just been doing hog things here as of late. I mean, I haven't found a good way to describe this market. It looked like we were finding a bottom there, finding a couple days to the upside, and then now we kind of leveled off again. So what's your thoughts in this hog trade?
We should be able to explain this pretty well. It's looked like the corn market that it was for a long time. It's pretty flat. It's done not a lot, but you'd think we'd be better at explaining what's going on. Sometimes we're just not. You look at a couple of positive things that we're seeing. You've seen the pork index kind of catch up on the lean hog index, and that's going to hopefully at least allow the pork, the packers to at least continue to increase some of their kills. But a lot of this stuff is kind of just flatlined right now. There's we talk about the pork production, what we have, inventories, and it's pretty heavy right now. We continue to see exports pull back here in the last couple of weeks, whether it's beef or whether it's hogs. We've become a lot more reliant on exports of beef and pork than we ever have before, and we're seeing big moves. If Mexico keeps buying, I mean, you can summarize it by saying if Mexico keeps buying pork, hey, we're going to be strong, we're going to be okay. And I think that's something to watch in the future. And they've been relatively strong. So as long as our exports is kind of the name of the game right now.
Well, and just thinking about this whole protein sector in general, and you alluded to it, I think here, as the calendar starts to get into that summer grilling season, how's that going to tie in with inflation? What's things going to look like at the meat case, that retail demand? Obviously, we usually see a bit of an uptick there, but I think to your point, some of those exports as well, if we can get off some of these marketing year lows, especially in the beef side, just looking at how all those things factor together, to me, it feels like I'm still very optimistic. This protein sector as a whole, I guess, is what I'm trying to say here as we go through the next couple of months ahead.
Oh, I agree. I think, very optimistic in what we have on the supply side. I mean, we are very, very short protein, especially when you look at the cattle market. Technically, if we can continue to hold those, the 100-day moving average right now, I think is pretty pivotal. It's healthy to see, I've always heard, the markets, to jump, they have to bend their knees. And I think that this is kind of what we're doing. We expected a little bit of a pullback. This thing's obviously not going to go up forever. But I am very optimistic on that protein side for many different reasons. And some of the negative things that you were going to hear about. We saw what January, I believe, was the third largest import of beef that we've ever seen. And you got to understand that those type of cheaper meats, those cheaper Brazilian meats are going to hit the market pretty heavy, and that's something that we saw in January.
Well, Jacob, great stuff. Before we let you go, any final thoughts? Anything else you want to reiterate and hit home for producers here as they're watching these volatile markets here in the middle of the month?
Well, as me and you both can agree on that, the economy is strong. I mean, we've been in Orlando, and everybody wanted to see Mickey Mouse, I think, because they were very, very crowded, very optimistic on that side of things. That hey, COVID's behind us, and we have strong things ahead of us. I guess if I want to sit here and look at the fear that's in the marketplace right now, we have had a very long period, whether it was meats, whether it was grains, where we had a slow, steady market with not a lot of choppiness. And we had a great opportunity when that happens is to be a buyer of options and be a buyer of some of these protections and flexibility contracts that people talk about. And I would encourage guys, if you look at it realistically, there's even when we've added a little bit of volatility in, they're still relatively cheap for what we've seen in the past. I highly encourage guys to take a look at different ways that you can protect yourself. I mean, the banking industry fall. That was something that nobody had on their radar. What's the next thing that's not on our radar to cause a disruption in these markets, and just be prepared for that.
Well, if folks need to reach out and get some advice from you and the team there at agmarket.net, I know they could do that very easily, simply just by going online to that website, can't they, Jacob?
That's our name right there, agmarket.net. Go look at the 30-day free trial of our intel. That gets all of our information to you. We'd be glad to send it to you. From there, we have on the About Us. You can check out our team, and all of our information is there underneath the pictures. And we would love to take the time to chat with you here before we get in the fields planting.
Jacob Burks with agmarket.net. Always great to catch up with you, man. Have a great week, and we will talk to you again soon.
Hey, guys. Thanks for having me.
That's going to do it for Market Talk here today. Thanks for joining us. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.